Hello and welcome to Sectors Up Close. I'm Angeline Ong. Our focus today is emerging markets and our guest is Bob Jenkins, Global Head of Research at Refinitiv Lipper. The latest data by the Institute of International Finance showed emerging market stocks and bonds saw net inflows of $53.5 billion in January, building on the momentum from the end of last year. This inflow has been reflected in stock prices. The MSCI Emerging Market Index, shown here, is heavily weighted in favor of Chinese stocks such as Tencent and Alibaba. It hit another record high on January 25th and is up 30% over the past 12 months. But this index, like all emerging market investing, covers differing economies on different continents, and not all markets are created equal. So how do investors avoid the pitfalls? For more on this, I'm now joined by Bob Jenkins of Refinitiv Lipper. Thank you so much for joining us. Now, Bob, you say emerging markets will outperform in the second half. Why is that?
Thanks for having me, Angelina. Really, coming into this year, the valuations for emerging markets were really at historic lows. If you look over the past 20 years, particularly vis-a-vis the U.S. markets, they're quite low on a valuation perspective. Performance-wise, they've been doing well. As you mentioned, EME, emerging market equities, did pretty well in 2020, equaling about the U.S., but the prior 2 years, they lagged a little bit. So I think in general, the recovering global economies were going to help ratchet up demand for basic materials. You also have that overriding backdrop of the weaker dollar, with the Fed seemingly committed to keeping it that way for at least the next 12 to 18 months. So that helps countries who are exporting primarily. It also assists them with their debt coverage. So yes, the emerging markets have floated a record amount of new debt over the course of the last year, and they're on a good pace to do so this year as well. That could be scary down the road if you think about it, if the dollar starts to strengthen.
Now, amid all this, you also say in your research that I've been reading that China will take the lead. Is this purely because, Bob, that they were first in, first out pandemic-wise, or are there other reasons?
Yes, they were, kind of ahead of the curve, if you will, on how they've experienced the pandemic. And one would suspect that kind of pent-up consumer demand that we expect a lot of developed countries to start to see over the course of the second half of the year will probably hit them quicker. And so that should kind of, again, be a real shot in the arm to the economy, if you will, using current vernacular. Global manufacturing in general has rebounded quite nicely, really across the board. And that benefits China, whether or not they're doing the manufacturing or they're supplying it. And then you think about the hard line that they've been having with the US on trade. Will that soften a little bit? Biden has signaled so far that he's probably going to continue that hard line, but I would sense that he's probably going to mend fences a little bit with China. We still have those current trade agreements in place and all the tariffs. It's going to be interesting to see whether or not we actually see any softening of that stance. But of course, that would be another tailwind.
And Bob, you mentioned wild cards as well in this EM space. Which countries are these and of course, why?
Well, the biggest wild card is just going to be the efficacy of the vaccine, right? And if that rollout of that vaccine is delayed at all, that's going to be a big problem in terms of that second half recovery that we're looking to see across the world. But then you think about individual countries who have some sort of instability, whether it be political or otherwise. Right now, Russia would be a headliner in that regard. And they've been struggling and probably were due to start having better performance this year. But right now, what's going on over there, and when you look at other countries such as Brazil, maybe perhaps even South Africa, these are areas where that instability kind of wild card could pop up and create some problems.
So given all this, Bob, would you buy, hold or sell on the sector?
See, I would recommend to buy into this space. Of course, whenever you talk about emerging markets, you got to be really conscious of the volatility that comes along with it, and also that you're not going to have this nice, smooth, long-term ride of outperformance either. So you got to be very careful about the fact that you're going to invest appropriately according to your allocation. So it's an area where you got to be careful in that regard. As a fund analyst, I think about this, and I think about really investing in active products at the end of the day. You want to have a management team with experience, with boots on the ground in these regions, and are able to act dynamically as kind of the situations change, because we know they can.
Thank you very much. Plenty of detail there. That was Bob Jenkins, Global Head of Research at Refinitiv Lipper. Now to some of the top stories in the EM space. The Russian ruble continues to be under pressure amid a government crackdown on protesters and supporters of Kremlin critic Alexei Navalny. The threat of US sanctions on Russia helped drive the currency beyond 76 to the dollar last week. Now, South Korea's central bank has warned of rising imbalances as a result in a surge in asset prices across property and stock markets and a build-up in debt too. The benchmark Kospi has more than doubled since last year, and housing affordability is at its worst ever. And finally, India this week boosted healthcare spending by 135% and lifted caps on foreigners investing in its vast insurance market to help revive an economy that suffered its deepest recorded slump as a result of the pandemic. Delivering her budget to Parliament on Monday, Finance Minister Nirmala Sitharaman also said the current year's fiscal deficit would surge to 9.5% of GDP. India currently spends about 1% of GDP on health, among the lowest for any major economy. And that is your roundup of the emerging market sector. I'm Angeline Ong, and this is Reuters.